Dipan, hi, good morning. Thanks as always for making time and joining in. Dipan, let's start off firstly with, the auto sales numbers. And while the numbers look great, but we were just talking about the aberration from both Hyundai as well as Bajaj Auto and the fact that their export segment is much higher in contribution to the top line now as opposed to the domestic sales. What are you making of this trend?
Yeah, Aisha, good morning and thank you for having me on your show. I think great set of numbers coming through from the auto industry. And clearly, the GST cuts have benefited auto volumes across the board. And more importantly, I think the managements are sounding very positive of double-digit growth rate for the rest of the year as well. So definitely, I think this particular GST cut has been a big trigger for auto volumes, which are kind of stagnating. I think broadly, more or less, all the numbers were great. The impressive ones, of course, came from Maruti M&M, and on the two-wheeler side from TVS Motors. I think very good set of numbers, and investors certainly will try and formulate around these numbers what the earnings can be. Also, I think the auto industry, what investors are not factoring in is that operating profit margins should certainly look up because of better operating leverages and benign raw material costs as well. So I think these are great times for the auto industry. I haven't seen this kind of a volume growth in a long, long time, and definitely December quarter numbers will be very impressive. And I think these stocks may have some more steam left in them to rally even from these levels. Having said that, we have an investment position in almost all the auto companies, so our views could be biased to that extent.
Okay, quite interesting. Okay, let's take a look at some of the other newsmakers this morning, and Ashesha joins in with that list. Ashesha?
Well, yes, first up, let's talk about a block deal which is expected to happen today in Bajaj Housing Finance, where promoter Bajaj Finance is looking to sell about 2% stake in the company. The price of this has been fixed at 95 rupees per share, implying 9.5% discount as compared to yesterday's closing price. Bajaj Finance currently holds about 88.7% stake in Bajaj Housing Finance, but they are looking to reduce it to about 75% by 2029. So on the back of this block deal, keep an eye out on this counter. Meanwhile, Bank of Maharashtra, on the back of their OFS, which will be open for non-retail shareholders today, government is looking to divest 5% stake. Base offer is of 5% and balance 1% green shoe offer, which means the total stake sale could stand at about 6%. The floor price has been fixed at 54 rupees per share, implying 6.5% discount as compared to yesterday's closing price. Perhaps we could see some bit of selling pressure on Bank of Maharashtra as well. Bharat Dynamics, meanwhile, on the back of an order win, the company said that they've won orders totaling to about 2,500 crores since the 13th of November. Afcon's infrastructure has also won PFC orders to the tune of 884 crores. And lastly, Raymond Realty, on the back of their new project launch, where the company said that they have launched Invictus by GS in BKC, Mumbai. The revenue potential of this project stands at about 2,000 crores. On the back of this, keep an eye out on Raymond Realty as well.
Okay, so all of those stocks in focus. Thank you so much, Ashesha. Those two ones are going to be key. Both of them are block deals.
No, one is office and one is block. Yeah.
To meet minimum public shareholding norms in Bank of Maharashtra. That should maybe actually be positive, because with this sale, it actually means that the government stake will fall below the 75% threshold.
Plus,
and therefore,
the demand for paper, I mean, public sector paper is also there, right?
That's correct.
So we're seeing a lot of demand coming in for all the new papers which are coming in, and while FIs are selling off in the secondary market, there is a buying interest which is there in the new paper, which is either IPO or OFS or block deals, which is there. So that's something which is important to note there. The second one is Bajaj Housing Finance. 2% there. Means now it brings in a sword on Bajaj Housing Finance, because now there will be promoter sales which will happen frequently till the time they reach 75%. So that's also something,
See, Sajid, but look at the bright side. The promoter sold, the IPO happened at 70 rupees a share. The stock obviously went to 180, has come back off. But the promoter is still selling at a very, very hefty premium. They're selling at 35% higher than the IPO price, which means that they are getting better value for their investment. So that's one.
And it's only regulatory compulsion. There's not too
Correct.
much to read into it.
That's
it's
true.
not like the promoters
true.
booking
You know,
profit
but-
because they need to.
That's true.
Regulatory compulsion, if that was the case, then Bajaj Housing Finance could have risen from the market as well, right? It's fresh issue, and their
Yeah, but-
promoter
but-
stake would have come down
But their
in that sense.
but their capital adequacy is very healthy. It's 26%. Now, I don't know whether there is a real need at this point for fresh capital, or maybe even the next 2 years they
But
may
there is
not
a-
require fresh capital.
True, but there is an overhang now coming on Bajaj Housing Finance for every time the stock goes up.
That's true.
That the promoter may
That's
sell.
true. And that will remain.
Something which has now come on the Bharti stock now. Because every time Bharti is going up,
Correct.
there is a fear that there is a promoter sale
Promoters
that
block,
because
yeah.
there is no clarity which has come from the promoters that why they are selling or till what level they are going to sell.
So okay, I'll come to Bharti in a bit. I have a view there, but let's go across. Dipan, these blocks that are coming through, and they're coming through quick and fast. First off, good morning. Welcome. We have Dipan Mehta, Director at Elixir Equities. Dipan, very interesting conversation happening. These blocks that are coming through with regard to both a Bajaj Housing and a Bank of Maharashtra. One where the overhang is going away, which is likely positive. How do you view that? And one where the overhang will likely remain, or in fact, it will increase skepticism, and the discount also is higher, 9.6%. How do you view both of these, and do you have a view on them, given that Bajaj Housing's IPO was at 70, went to 180, now at 100? What should an investor do?
See, I think these are all known facts. When the Bajaj Housing went public, also we were aware that at some point of time we should expect promoter selling. And in the past, we have seen in markets like this, promoters are being opportunistic, they are taking advantage and they are selling. But end of the day, the money is flowing back to Bajaj Finance. So as a shareholder of Bajaj Finance as a measure of disclosure, I think it's quite positive from that point of view. And I think the markets are such, the liquidity conditions are such that such sales are definitely being absorbed pretty well and hardly has had any effect on the stock prices. I think, look at what happened with all the other sales which are being done, like Whirlpool, for example. The promoters have been selling, yet the stock price is going higher and higher. Same is the case with Indigo. I mean, Indigo had a big issue between the two promoters, and one promoter has been consistently selling stock, and yet we are seeing hardly any effect of that on the returns the stock has generated. So this is part and parcel, and there are a lot of deep pocket investors prepared to invest in such huge lots. Also, the advantage is if a mutual fund buys these companies at such a huge discount, it immediately bumps up the NAV by a few percentage points or paise. So that also is certainly an incentive. So I'm not too concerned about this, so long as the promoters behave in a responsible way and space out the divestments which they are doing and time it better. I think the market can keep on absorbing. End of the day, the money remains within the system.
Okay, understood. Dipan, great to get in that perspective. We'll take a very quick break.
Is auto sales and all of those data points coming through. Dipan, how are you reading into the numbers, and anything that stood out for you specifically before obviously Ashesha comes in, takes us through some of those numbers and really helps us contextualize which are the names which we should keep in mind?
As already discussed, I think great set of numbers coming from the auto industry, particularly impressed with M&M, TVS, and Force Motors. I think very good set of numbers coming through over there. And you perhaps may have missed it, but VST Tiller also reports its monthly figures, although it's not exactly auto, but certainly agri equipment. And those numbers also are quite impressive. I think the GST cut has acted as a big trigger for the auto companies. And more importantly, I think the industry is quite optimistic of maintaining good growth rates going ahead also, after having such a great month on such a great festive season. And now I think they're looking forward to a very strong marriage season and beyond. And then come next year, 2026, you will have new models and new year. So therefore, I think demand should sustain for some more time. Looking forward to great numbers coming through for the December.
Likely solid numbers for December is what Dipan is penciling in. Dipan, okay, let's go across to Ashesha with regard to those auto sales numbers. Ashesha, mixed bag, but broadly positive for the month of November. Larger, lower sequentially on the back of the festive boost that we saw. Tractor sales remain upbeat. Talk to us about what the auto sales numbers look like. Give us a roundup.
Well, yes, largely better than what the street was working with across all categories, whether it is commercial vehicle, passenger vehicle, two-wheelers or tractors. All of them have reported strong double-digit growth on a year-on-year basis. But as you mentioned, on a month-on-month basis, numbers do look weak. But this is on account of higher base effect. October had that impact of Diwali and Dussehra, and hence on a month-on-month basis, numbers definitely look weak. TVS Motor, Hero MotoCorp has reported better than expected set of numbers. If you look at the numbers, Tata Motors passenger vehicle has reported a strong 26% growth on a year-on-year basis, with sales standing at about 60,000 units. We have Maruti Suzuki, which surprisingly has reported an uptick on a month-on-month basis of about 4%, 26% year-on-year growth. So that's Maruti Suzuki for you. We also have M&M Auto, which has reported a 19% growth, and as I mentioned, on a month-on-month basis, it's a 4% decline. But within the passenger vehicle segment, Hyundai is the only one that has reported single-digit growth of 9%. So that's an outlier within the commercial vehicle segment, and on a month-on-month basis, it has reported a decline. Shifting focus to the commercial vehicle space, then VECV Eicher Motors has reported a 37% uptick YOY, so that's good, better than what the street was working with. We also have Tata Motors commercial vehicle 29% uptick, and Ashok Leyland at about 29% on a year-on-year basis. Shifting focus then to the two-wheeler segment, and they've also reported strong set of numbers. Eicher Motors RE at about 22%, TVS, Hero MotoCorp and Bajaj Auto have all reported strong set of numbers, and within this segment, Bajaj Auto has been an outlier because that one has reported weaker than expected set of numbers. Bajaj Auto should come up for you on your screens, only 7.5% YOY growth versus other peers in the same segment which have reported a strong 25 to 35% YOY growth. So Bajaj Auto clearly has been an underperformer as compared to its peers. Lastly, tractor segment, Escorts has reported a strong 18% growth. Remember, we were not expecting strong sales from tractor, but they have also outperformed. Both Escorts and M&M Tractor has reported strong set of numbers. M&M Tractor at about 32%. So clearly very strong set of numbers, and most of them have reported strong double-digit growth on a year-on-year basis.
Okay, thank you for that, Ashesha. Dipan, a couple of stocks which have done extremely well within that auto pack is a Force Motors, is one of them rather. And there's also SML Isuzu. Now, of course, a different fact pattern for SML, so I won't cover that. But talk to us about Force Motors and the kind of rally that we've seen in the stock, the kind of catch-up. The re-rating done according to you, or is there still opportunity there?
See, the thing about Force Motors is that they don't really have an investor relations division only.
Sure.
And there's no investor release also, so it's very difficult for us to understand the company, what the management plans are. I don't think I've ever seen an interview. I don't know whether on ET Now the management has come and spoken about the company as well. So it's like basically you have to take a leap of faith and build conviction. But nonetheless, I think it's a very strong group. Apart from this poor investor relations, their corporate governance have been pretty steady. And despite many challenges, they have continued to remain relevant. And within the kind of categories they are operating in, they have a very strong competitive position. So this is the company you buy and invest for a long, long period of time, and hope that the management really delivers on its compounding story. And gradually, I think we've seen even the P multiple expand for Bajaj, for other Force Motors. I remember it as Bajaj Tempo. So as an investor, I would remain invested. And a great entry point would be when a quarter or a month sales are flagging for whatever reason. The stock price correct by 20-30%, that may be a good entry point. But definitely a company worth watching, takes a little bit more hard work to keep on tracking it.
Dipan, I don't see that 20% correction. Year to date, that stock is up 2.5x plus, in fact. So it's been a phenomenal ride for someone who's invested at those 6,000 levels at the start of the year. We're currently sitting just shy of 19,000 in terms of the stock price, or 18,500 in terms of the stock price. What do you make of this on charts, Kunal, with regard to a Force Motor? It's been a standout within that auto pack.
Yeah, absolutely. I think when you look at this on a YTD basis, when you look at this over the last 3 or 4 years, the stock has been phenomenal. I think 3-4 years back, 2021 or 22 rather, and the stock was almost at 900 to 1,000, and now the stock is upwards of 18,000 plus levels. So it's done phenomenally well in that sense. But I also believe that yes, this 20% correction seems to have happened for Force Motors in the last 6 odd months. I think if I'm not wrong, 21,000 plus was the high for Force Motors in the month of July, August somewhere. And from there, the stock had corrected towards almost 15, 16,000 mark. So 20% correction has happened for the stock price. Now I think at current levels, it's now coming back after this decent correction for Force Motors. So even at current levels, the stock looks attractive in terms of risk reward. The stock looks attractive in terms of a possible or a potential breakout on the upside. And then when you look at the price trend over the last 3 or 4 years, it's been a phenomenal price mover. And that I believe could be an indication that the long-term trend is still intact on the upside. So both in terms of the short-term charts as well as in the longer-term positioning of the charts for Force Motors, I think it's at a very attractive price point to go for a buy even at current levels.
Right. In fact, I actually stand corrected from the top, from the 52-week high to the recent low. Stock corrected 30%, Sajid. So you do get those opportunities, but this one
But it's
obviously
pretty
standing
much
out.
in broader line with the market as well, right? Some of the
Yes.
stocks, mid cap stocks, have corrected 20
Yes.
to 25% from the top. Deepam, what's your take on the IT companies? We entering into the end of Q3, and we saw some kind of a tailwind for some of the IT companies there. But how do you see some of the IT companies?
I can smell a trading rally in IT stocks. The reason for that are technical and to an extent the fact that they are underowned. And also there's a base effect which will benefit when they declare numbers for December and March quarter. And a lot of the IT companies are sitting on very good contracts which have yet to translate into higher earnings. So I can sense that there could be a nice trading rally in the IT stocks. But I'm not sure of the long-term prospects of these companies generating the alpha and outperforming by a significant margin. And the reason for that is that in the last 35 years that I've been tracking these companies, this is the first time that I have seen that a very strong tech wave has completely kind of, gone past them and not raised their revenues and profits. If you go back to the history of the IT industry, right from Y2K to internet to application development, all the various tech trends which took place, they really lifted the earnings for the IT companies and the industry where it is just now, because wave after wave there were technology changes. But this entire AI suddenly doesn't seem to be having any much of an effect on these software services companies. It has not raised their revenues or their profitability. In fact, it seems to be like a bit of a threat as well. So that I think has a is a fundamental problem. I think with the industry, and I stand corrected that tomorrow if the IT services companies start to grow double digit or even higher because of a wave of new AI projects which really lift the revenues, then I stand corrected. But otherwise, I think that broadly these companies, after perhaps a trading rally, will again start to flatten out. And over a longer period of time, I don't see them generating a great deal of wealth or value.
Kunal, the top gainer yesterday was metals, up 0.6% odd. I know it's nothing much to talk about, but let's talk about metals for a bit. Do you expect again fresh highs on the metal index anytime soon?
Not anytime too soon because there are a couple of changes which have happened. The risk appetite for the market is still not we are still not into a risk on more from the market perspective. We are still going to a very staggered kind of an uptrend. So that I think could probably play as a stall effect for the entire metal counters whenever they go into any kind of a breakout or a potential momentum upside. The other way to look at it is that there is no major break which has happened on the dollar index. So earlier it was almost on the verge of breakout of 100, mark on the upside. Now we are trading closer to $99 mark for the dollar index. So the ranged action is also keeping the metal index at bay. The only thing is that many of these stocks in the metal pack had corrected by more than 10% to 15% in the last say 1 month of the price action rally. That I believe could probably have made the risk reward a little bit more attractive for traders who are looking at a buy, because metal stocks on a correction at a 10%, say a broad 10% to 15% downside from the previous swing highs, they generally call in for a good entry point from a contra perspective. So that's the only positive part for metal names. But at large, I would believe that they could be at best market performers or maybe slight under the market performing zone in terms of sector approach.
Okay. Just looking at the market texture yesterday, a couple of these mid-cap names actually were holding up. But Kunal, to the point that, the broader market hasn't quite caught on the way, the benchmarks have. When do you think that across-the-board participation would come in, when mid and small caps as well would be rejoicing at life highs?
Very difficult to anticipate that, Aisha. But yeah, I think it's a very pertinent question because that is one of the reasons why you're not seeing the market participation being, all out as such. We look at the trading quantity, overall trading quantity of the on the NSE, the traded value on the NSE, that at every new high index has been making 26,200, 300 levels. The actual trading quantity and the trading volumes have dropped down, for the market. That is not an encouraging sign because you would want to see more participation on the upside in terms of trading quantity and volumes for the overall market, but that drops down. It's purely because of the fact that the mid cap end of the markets have underperformed. Very difficult to anticipate when that would turn around, whether it's some kind of event, some kind of trigger, some kind of news flow. Maybe the tariff, etc., could probably trigger this kind of potential turnaround as such for the mid cap in the market. But so far, that's one of the major reasons why you're seeing that Nifty going into a stall every time it goes into a breakout mode.
Okay. All right. So that's a take also coming in. But let's move on. Infra is one of the sectors in focus. Road activity for November has been muted. However, construction activity has improved. My colleague Rabinder joins us with more details and what brokerages are saying on this count. Rabinder.
Well, yes, road activity in the financial year 2026 remained muted, but the construction activity has started a gradual improvement on a month-on-month basis and a year-on-year basis. And NHI has awarded only approximately 78 kilometers of road project in November 2025, which is a sharp drop from 440 kilometer in the same month last year, and also lower than 90 kilometer awarded in the October 2025. And on a, if we look about the year to date basis, then awards stand at 468 kilometer across 57 project, which is down 36% year on year basis compared to 726 kilometer across 31 project last year. Meanwhile, as per reports, the authority has invited bids for 52 projects covering 2,188 kilometer worth around 1.15 lakh crore in FY26 so far. And National Highway of Authority has set a much higher internal target of awarding 4,500 kilometer this financial year. And on the execution front, construction activity has started a gradual improvement. It has improved to 292 kilometer in November 2025 as compared to 238 kilometer in the October and 220 kilometer in the November last year. However, YTD FY26 construction remained lower by 8% year on year basis at 2,135 kilometer. NHI has exceeded its FY25 construction target by 9%, delivering 5,164 kilometer. Although this was still 15% lower year on year basis due to earlier muted awards. For FY26, the construction target stand at 5,000 kilometer. And from a sector standpoint of view, Nuvama remain cautious on this sector road, because the road awards have now been weak for the two consecutive years, and the lack of any increase in road capex in FY26 budget only depends concern about a meaningful revival.
Right, okay, that's the road activity pulse in the month of November. But take a look at Wockhardt. That is one stock which was the star performer yesterday, no doubt. They got the NDA status for the novel antibiotic, which is Zenic, and got the approval for that. And look at the way the shares actually jumped up in trade. Dipan, I'm curious to know, where is it that you have a positive bias within pharma?
No, I really missed Wockhardt over there. I mean, it was all there for the picking. And I just want to add on Wockhardt that when you do talk to the management, don't just ask about this Zenic, but also they have a very nice, impressive list of other molecules which are in advanced stage of commercialization, and whether those also will add value to the company. But no doubt, I think if Wockhardt is able to succeed and get this particular molecule on the market, it will be a first for India, and definitely something to be really proud about. And it Wokat to a completely different zone because the value that can be created is quite phenomenal, many times the present market cap of the company. Coming specifically to your question on pharma, we're very positive on a lot of these CDMO companies, contract manufacturing companies, although last quarter was a bit weak and investors should expect a high degree of volatility in their earnings. But China plus one strategy is playing out over there. They are to an extent protected from US tariffs and great deal of R&D which is taking place globally. A lot of that research services will come through Indian CDMO players. So companies like Cohance, Dishman Pharma, DV's Labs. Then there is One Source. I think all of these companies have a great future. They're expensive just now, but if you have a like a 3-5 year type of a view, I think these companies can deliver very good returns going forward. And I would say that they are the companies which are, I would say, have a technological edge also as compared to a lot of other pharma players.
Dipan, you obviously indicated that you've missed Walcott. Would you buy now?
Well, it's it's on our list,
Sure.
and it's a difficult decision to make. But what happens is that from time to time, even high flyers become quiet, and that's the time perhaps to look at them when they are not in the spotlight. So I think this news also will come and go, and then stock may correct because there's maybe hype around it right now. So when the stock corrects, when the hype is over, it's not in the spotlight. That may be a good entry point, and one needs to continuously track the progress of this new molecule. And end of the day, if I may just extend for a second or so, company like Wokhar has to be looked from the point of view like an option, where you buy a small quantity and keep it. And if it is successful in monetizing the molecule, then the stock price can go up, I think, many fold from here also and take it to a different orbit. If for some reason it is not successful, then you may see a 30-40% correction. And if you're able to absorb that kind of a loss in your portfolio, then certainly you can adopt this strategy of looking at workout as an option and giving at least some small allocation in your portfolio.
Wockhardt has had that kind of history when the stock has had very long periods of stark underperformance and has, grappled with a 40 to 50% kind of loss as well. But Kunal, what are the charts now? Where can it go from here?
Yeah, absolutely. In fact, Aisha, in the very recent past, I think from the July highs for Wockhardt Pharma, the stock has gone through a very similar kind of a correction. It was almost at 1900 levels, June, July somewhere. And from there, the stock corrected to also almost 1200, 1230 mark. So a decent 600, 700 point correction, which is already shaped up for Wockhardt Pharma. So yeah, I would agree largely that the stock has this odd tendency of going to a sharp phase of correction. But more importantly, the resurrection the stock has shown from the 2020 21 lows when it was 150 thereabouts, I think has been phenomenal. I see the stock as a high potential stock on the breakout on the upside. It's just that what's capping the nature of the stock price, that's this high beta movement, is what I would probably believe could discourage more short term traders, because when you see swings of 15-20% in a matter of just about few days or a couple of weeks, that tends to discourage traders if someone is caught at the wrong end in terms of trading. But yeah, I would believe that the recovery in the last 2-3 years for Wockhardt Pharma is something which is very, very attractive, and this makes the stock a lot more attractive.
Deepan, what's your view on Bajaj Housing? You have a block deal which is coming in. That also brings in an overhang of promoters selling further till they reach 75% over the next few years. What's your view there?
I think it's just better to buy Bajaj Finance. As a measure of disclosure, we and our clients are invested in Bajaj Finance, and you can capture Bajaj housing from that point of view. And you have the advantage of a well diversified NBFC, the largest in the country, with very strong growth rates and very good risk management practices as well, and reasonable valuation. It's been a great compounding story, and I think that'll sustain for a few more years. So rather than going for the subsidiary, I would prefer to go for the holding company.
Very interesting. Deepan, thank you so much. We'll let you go on that note. Thanks for coming in and speaking with us.